It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, May 24th, 2016, squeezing out the last few drops of this amazing month of May. It's been a great month so far. Hope you guys are having a great week out there so far. Got a short week this week. Get that holiday weekend coming up. Don't forget to mark your calendar, Memorial Day weekend, right around the corner. We have another exciting newsletter for you guys and gals tonight. We got crude, S&P, gold, and of course the euro. We certainly got some life back into these markets today with some big moves across the board. Crude and the S&P are bullish, while the gold and euro are pinned to their lows and bearish as we go into Wednesday's very important session. Before we jump into charts tonight, I do want to remind you the only place to watch the full-length version of this nightly newsletter is here on our blog at sidewaysmarkets.com. If you're watching this video on our YouTube channel or anywhere else on the interwebs, it's not going to be the full-length version. The full-length version is here on the blog at Sideways Markets. If you're on the YouTube video right now, there's a link in the description of the YouTube video. Follow that link and come join me on our blog for the full-length version. While you're here watching, don't forget to grab a free pass in the upper left-hand corner. If you're not an advanced member here at School of Trade and you'd like to join me as a guest for a couple days this week, grab your free pass in the upper left-hand corner. Right below the video, lower left-hand corner, you can register as a member of our newsletter mailing list. I'll send you an email every evening right about 7:30 p.m. when the nightly newsletter goes live. Promise no spam, nothing but the good stuff for our nightly newsletter. Don't forget, when you register for the mailing list, check your inbox because I'm going to send you a verification email. Right below the video tonight, don't forget, you can download all the charts you see me using in tonight's video. You can download those charts by following that link below the video on our blog. And then I get this question all the time: what does it mean to be a student? What's included in our membership course? What am I going to learn? How do you guys trade here in the trade room? You can learn more about that by taking our free trial on the right-hand side. And don't forget, we've always got someone standing by 24/7 to answer all your questions. Hope you guys are having a great week so far. Another busy day in the markets. Boy, it feels great to be a day trader right now. I'll tell you, big volatile markets. Let's check the schedule for tomorrow, to the calendar for tomorrow, and then we'll go into charts, crude, S&P, gold, and of course the euro. Hump day tomorrow, Wednesday, May the 25th. Let's start first by looking at this evening. We've got real minor news, merchandise trade out of Australia here, out of New Zealand here overnight. Not a big deal on that news. It is not going to be a major market mover. So nothing in Australia, nothing in the Asian session overnight though. Wednesday, May the 25th, what do we have on the calendar here? We got the IFO survey at 4 a.m. We have 8:30 a.m. international trade. We got the BOC at 10 a.m., the EIA at 10:30. Can I throw in a few more acronyms for us right now? I apologize about that. As you can see, though, we do have some major news on the schedule for tomorrow, Wednesday, May the 25th. The big market movers for tomorrow, the ones that we pay attention to, are going to be the IFO survey at 4 a.m. if you're trading in the London time zone tomorrow. If you're with me tomorrow morning, after we open up our trade room at 8 o'clock Eastern time, will be with me tomorrow morning in the trade room. 8:30 a.m. we have the international trade number. That'll be a big market mover. Probably the least most important of the session is going to be that Bank of Canada announcement at 10 a.m. You may see it move the needle a little bit on crude oil futures. A big export out of Canada is going to be the oil futures. So we definitely may see a little bit of a movement of the needle there tomorrow for crude oil, but I think the big number for tomorrow for all you crude traders is going to be the petroleum status report at 10:30 a.m. Eastern time tomorrow. So those are your major news. Don't forget, in our beginners course here at School of Trade, we cover all of the economic news schedules, the trading calendars, how we trade the news, and our news strategies. Tomorrow, we'll be watching those right along with you guys. Tomorrow morning, we open up our trade room at 8 o'clock Eastern time. The big news tomorrow, though, is going to be 8:30 a.m. international trade, and then if you're a crude trader, tomorrow morning at 10:30 a.m. And I probably should also remind you, too, that the S&P has been tracking crude oil quite frequently lately. So don't forget, if you're an S&P trader tomorrow, you might want to have your one eye on the crude chart tomorrow at around 10:15 to 10:45, because you will probably see some response on the S&P as well. You get the calendar for tomorrow ready to rock and roll. Don't forget, we'll be trading this stuff live in real time tomorrow morning in our trade room room at 8 o'clock Eastern time. Let's start with crude. We'll go crude, S&P, gold, and then we'll wrap up with the euro. Crude oil is bullish and trading at the highs of a spiking channel this evening, which tells the buyers to take their profit and wait for the next opportunity back at the lows of the channel, while the short-term sellers definitely have a window of opportunity to scalp back to those lows, but do not confuse this. This is a bullish market until proven otherwise. The bulls had control for almost the entire session today with a spike in channel to start the session, which eventually widened out after the API inventory news was released later on this afternoon at 4:30 p.m. Eastern time. Price is currently at the highs of that channel, which is a horrible place to be a buyer, so the bulls will stay patient and look for lower prices down at channel lows, which will give those sellers a window of opportunity to sell back to those channel lows before the buyers become interested once again. As you can see here on the chart, we get that big spike higher here. That spike, of course, is all coming off of the Tuesday afternoon 4:30 p.m. API news that's released every Tuesday at 4:30 p.m. Tomorrow, of course, being the DOE number at 10:30 a.m. Again, we get a whole chapter in the beginner's course that talks specifically about this economic news and what our strategy will be to use it. As you can see here, we get a handful of technical clues here right now on the chart. First of all, we have two spiking channels. The session actually began today with a bullish spike in channel. You can see I have that marked up in the darker color in the background. Had a beautiful leg one retest. If you're a student of mine, a beautiful leg one retest after that bull spike in channel. After that news came out though, as you can see, it then widened out here now to a bit of a wider spike in channel. This one not as concrete as the first one, but as you can see here though, we're getting some pretty decent rotation. It always has to pass the rotation test. Low to the high, right, high to the low, and then low back to the high. This bull spike in channel basically tells the buyers to look to buy the low, right? Look to buy here, look to buy here, look to buy here, right? That's basically what that spike in channel tells you right now. As this price pulls back, buyers will be buying into the low of that channel for rotation back higher. If it pulls back even further, they're going to look for buying opportunities using that triangle, that prior swing at 48.44, and really the battle zone, the last resort here for the buyers will be down to that 48.13. That's where they'll be looking to really add to their position. This obviously is the most attractive spot for the buyers because they get a chance to buy as if they were buying at 9 o'clock this morning. Instead, they're buying tomorrow after a big spike higher. So one thing we know about this is we definitely have a bullish market, and swing buyers are going to be looking for opportunities at all of the areas of support listed below. Now, of course, we've got a lot of support waiting here. The API inventory number support. We have the low of that channel. We have the prior swings and the battle zone here. We definitely know those spiky channels tell the buyers to be looking for buying opportunities as this price pulls back. It also, as you can see, is going to give the sellers a short-term window here back to low of that channel. But here's the problem. We have the measured move support at 49.03. We have the prior swing level support at 48.93. We have the API inventory support at 48.86. By the way, if you're a member of mine, we did post all the information in our chat room tonight, courtesy of that API number. As it goes lower, we have a prior area of support down here. That's going to be an area of interest for the buyers. A prior swing at 48.44. As I said before, these are all areas of interest for those buyers, and they will be looking to buy this market as it pulls back. So if you're planning on being a seller right now, wear a helmet. Definitely wear a helmet, and don't get too greedy because those areas of support are going to be waiting for those buyers to keep trying to take swings at this to buy it up. I wouldn't be surprised if we see aggressive buyers trying to buy here and buy here. We definitely know though that the most reliable buying opportunity will be back at the low of that bull channel on the way up to targets waiting overhead. The API inventory number overhead, 49.27 resistance. The double up target overhead, 49.46 resistance. And of course, don't forget the top of that bull channel will also be an easy area of resistance as well. We have the measured move, as you can see here. AB pulls back to C. blows right on through that measured move. It did happen on news. Don't forget this measured move. A couple things you want to remember about measured moves. First of all, they will be used as support, right? That will be used as support. If we get back below the measured move, it'll then become resistance. So remember, it's support below, it's resistance above. And don't forget, a lot of times what happens is it'll pull back and give you a quadruple measured move, which will measure using that A to B leg. We'll then go back out here. I don't know where that pullback will be yet, but the deepest part of that pullback, that's where you'll measure, right, that that triple measured move higher. So waiting for that pullback, then we can draw up for that triple measured move. So measured move area right now is support. You will see aggressive buyers buy that as support. We make it below it, it becomes resistance. And of course, if we pull back here further, right, don't forget to look for that measurement for the triple measured move going higher. Double up overhead, that's going to be a target at 49.46. The triangle, this triangle, ultimately it is going to be support on the way back down. This triangle here, not as important now that we broke higher, but definitely shows us an area of support here as we pull back into that triangle. And of course, the API numbers are support below and resistance above. Don't forget, in our intermediate section of our website, we talk about technical analysis, and one of the things we cover in the intermediate section of the website is going to be using those API numbers for support and resistance. You got a good plan there for Crude. Don't forget, join us tomorrow. We'll see you guys live in real time tomorrow morning at 8 a.m. Eastern time. Now, I got to apologize. I talked a little bit of smack yesterday to the S&P 500. If you just look left, you see that pathetic trading range. Remember this? We were laughing about this in last night's newsletter. We talked about this, though. That was the measured move right there. That was your measured move, and then blam-ho. So really no way of knowing that it was going to go that strong. But what we did know was to buy the low and sell the high. So a beautiful move off a trap low at the low of that trading range from yesterday. But I don't think anybody saw this coming. I don't think anybody saw this coming today. Look at this move. I mean, this looks like one of those old articles you see in the old stock almanac, right? Corn's going to the moon. This is a very, very strong push higher, as you can see here. When I see something like this, the first thing that comes to mind is it really doesn't matter where the channel is. It really doesn't matter where the measured moves are. It really doesn't matter where the double up is. All that matters is wait for a trap and buy it with a target back at the high. When we see moves like this, and we get a move like this on gold and euro, but in the opposite direction, whenever you see a market that is pushing extremely strong higher like this, you know that there are going to be limit buyers just buying all the way into this move going lower. And what they'll do is they'll buy 1, they'll buy 2, they'll buy 4, they'll buy 8, they'll buy 16, and they'll scale right into this. These are who we refer to as swing buyers, right? On the euro and gold, you're going to hear me talk about the swing sellers. What they do is these are obviously seasoned traders with big accounts. They have what we call a catastrophic stop, right? Their stop loss goes below the lows. And they know that as this price pulls back, if it pulls back really weak and goes higher, perfect, they make money. If it pulls back even further, perfect, they make money. It's very difficult to lose money this way. The problem is that you have to have a very large account to be able to do this. It's a very good example, though, of why I tell all of my students, grow your account. Forget about trying to be aggressive, be conservative. Get that account up to 25,000, 50,000, 100,000. Grow that account. We have a very specific strategy for account growth and compounding profits, because when you grow your account and you can risk less than 1.5% of your account, you can trade like this, right? But if you're always busting up your account or taking money out of the account to buy frivolous things, you're never going to be able to get to that point where you're almost bulletproof. And this is where you become a bulletproof trader if you can really understand how these scaling in opportunities work. Again, you're talking about a